133, we're going to be breaking down the Russia-Ukraine war and how that will potentially affect us in the real estate industry here in the States, as well as Opendoor and Zillow offers. What does their loss of billions and millions of dollars mean for us? We're going to get started right now.
In-depth analysis.
All right, episode 133. We are breaking down today the Russia-Ukrainian war and how that could be affecting us here in the States, maybe economically, as well as with our real estate industry. And we want to dive a little bit more in depth with the Zillow offers that got shut down at the end of the year. And then now Opendoor has talked about how they've lost a ton of money. So we're going to get started in breaking that down today. But today's show is brought to you by Mortgage Mike. So if you're looking for a Texas lender, Mortgage Mike is the answer. Go to mortgagemikeoftexas.com, as well as the best property management company in DFW, voted by us three here. So go to homewarddfw.com if you're looking for a property manager. So last but not least, go over to our Facebook group, the only real estate group worth being a part of. Go request access and let's join up.
Check it out.
Yeah.
It's good to be back, man. We weren't here last week. We were snowed in. Can I share with you guys a tale of like being too detached from the outcome? Because we focus a lot on like habits, be detached from the outcome, and good things will happen. Like, don't get emotional about things, whatever. Whenever it was iced over last week, I was getting my hair did, and lady was driving my car home. And she texted me. She was like, "Baby, I'm so sorry. I have to tell you something." I was like, "I'm on a lot of Valium right now," because I was getting surgery. So I was like, bring it. And so a car like spun out in front of her on the ice. And then she had a swerve in my car and smashed the curb so hard that like one of my tires is at like a 45-degree angle. Like my wheel alignment, they're all messed up. And so I took it to the dealership 3 days ago. And I was like, I just want to know if this is fixable for something that's less than my deductible, or if I should just do an insurance claim. And so they're like, all right, we'll give you an estimate. We'll call you back. And like, they didn't call me back that day. They kept it overnight. And then I just got so carried away with the rest of my life that like the guy texted me early the next morning, the estimate. And I was like, I'll just come pick it up. And literally a full 36 hours later, it finally dawned on me when I was at the office. I was like, I never picked my car up from the dealership. Like they texted me again. It's like, are you coming to get this thing? It's been here for 72 hours now. And
I don't think that would happen to most people, though. Most people would need to get to and from a place with their vehicle.
I just walked.
Yeah.
Got my steps in.
Smart. I like it.
But anyway, yeah.
Yeah. So, all right. What we look. Just a little bit of some updating. We are wanting to start to breaking down more of the events that are going down, nationally, internationally, and how that's going to affect us. So you're going to start seeing more of these shows where we're addressing immediate issues. So one of the things going on, obviously, if you watch the news, last night was the State of the Union.
Yeah. I didn't watch that. I caught the highlights on ESPN.
Yeah, I missed it. I was at a dinner and I was like, I really was wanting to watch it.
That was one of the first one in a long time that I actually wanted to watch.
Yeah.
Or at least get a transcript of.
Yeah. And so the Russia-Ukraine war and how could that affect us here, just within the real estate industry, since this is a real estate show. And one of the things that we've talked about is, we've already noticed interest rates are going up, right?
Yeah.
We've also noticed that there's huge cost of goods and services going up.
Sure.
And we're now battling inflation that's at some of the all-time highs, at least over the last, Brian probably has the answer, 30 years, 40 years, 50 years?
It's probably since the 80s. I mean, you think the last time inflation was really, truly this high, at least advertised like consumer price index inflation, was probably the mid-80s. And that's why interest rates got raised so high, was to stave off inflation. So it's been 40 years probably. Can you give us like a little CNN or something on Ukraine? What's the latest? It's what, 11 o'clock at night over there? It doesn't have to be CNN. That's just the first thing that came to mind.
Yeah.
I just want to frame this conversation properly. Gosh dang it. I hate the fact that every time you Google Ukraine, something's on fire.
Yeah.
That is so infuriating to see. Do live updates. I just want to see where we're at. The one that's 23 minutes ago or whatever. That's fine. Just something.
Right there.
The Independent.
This is just such a fast moving conversation. I want to know like how we're supposed to frame this thing. They usually do. Yeah. So are they going to join the EU? Maybe.
Yep.
That would be.
Look, the biggest thing out of all of this, though, is as these sanctions are starting to happen, and we're now seeing oil prices rise.
Yes.
So we're gonna see the cost of running your life is going to go up right now, right? So cost of fuel, gas is going up. Your net worth may go down a little bit because the stock market is really volatile at the moment.
Sure.
Yesterday, I mean, mine was all red.
Yeah.
It was not good.
Yeah. Today's been better for sure. I bought a whole bunch. I doubled down on a lot of my fundamentals positions yesterday in my value stocks, and today's been a little bit better. That's actually a really interesting entire conversation I would like to dive into is investing in wartime, which is something we've never really had the opportunity to do. But it's a very interesting concept there, but that's obviously a big factor.
I mean, I would say that if you're investing in that, it's going to be probably in the stocks, maybe gold and crypto, because I know gold prices are up. And because Russia is now buying a ton of gold.
Yes.
So, I mean, from what I've seen, let me see here. Yesterday, gold prices were doing pretty well. They're at they're $1,933.
Yeah, I think it was like 1870 yesterday's close, and now they're up a little bit more, probably.
Yep, it's at $1,933.
That's good.
Yeah.
Well,
so,
I mean, that's more, I should say.
Yeah. So the impact that we will most likely feel within the real estate industry and the economy is that, if it really is going to impact us, we're probably going to feel it in the higher end markets first. So some of the reports are saying, high-end real estate markets such as like vacation and luxury homes are most likely going to be the first sector that could be impacted by this war.
Okay.
Right. And
so what does that look like? So
it says these purchases are easier to delay and they draw a larger part of the financing from the volatile financial markets. It says, however, and I'm taking this from realtyBizNews.com.
Sure.
And it says, however, real estate is a large purchase for buyers in all price ranges, and the reluctance to pull the trigger will spread everywhere if the Russia-Ukraine war drags on for a long time. And I've heard, I don't know, I haven't looked this up to confirm if this is accurate or not. Some of the groups that I'm in talks about that the U.S. thinks that this could be a long, drawn-out thing. This could be 10, 15 plus years.
I don't know why nobody, I don't know why that's not even like the normal way of thinking. This is, if we've learned nothing since March of 2020, it's that we get like, we have this immediacy where we think that pandemic is going to be over in 3 days.
Yeah.
Like, why are we not thinking that this is an actual, legitimate, real, here to stay war? Like, it very much, I shouldn't say it could be. I'd be surprised if it wasn't.
So if this were to happen, let's kind of pose a hypothetical, because when the pandemic happened, if you remember March of 2020, right? Mm-hmm. We did our show from the real news station.
Yes.
We were still doing it kind of, and then all of a sudden shelter in place starts happening, and then we were having conversations. We were like, there's no way that the economy is going to sustain. There's no way that we're not going to see a ton of people flooding the market, because we were concerned. They're definitely concerned about the skies falling, so people would be cashing out.
Right.
And the exact opposite happened, right? They started printing money. Less homes were going on. People were wanting to buy and move because they were trying to get to maybe to states that were a little bit more favorable within their shelter in place or how they were handling the pandemic. And then you saw that people were trying to get to maybe the outskirt areas, so that they had more space or more, homeschooling and double offices and all that other stuff. And so what do we see? What could we potentially see on this one? Does it drive us further with higher prices because we're still going to see less people put their home on the market because they're even more scared of this than the other?
Yeah. Well, so, and I'll let Kelderman jump in as well. Like, and I think we should say first and foremost, like this is actually we've had a lot of conversations around this, and sort of the people watching and listening, like we have just we wanted to just express our deepest sentiments to the people of Ukraine, and that we stand by you, and this is like, I don't have, like, we're just gangster here. This is a fucking bullshit war, and I hate what's going on over there. I have conversations with my father about this every night, and it's driving me fucking crazy. I say that to say, going back to the pandemic, I think is a great example where you can get some insight on how U.S. markets, real estate, and other markets, even equities and things like that, will react over the long term. So the pandemic is a good example. As far as maybe some of the parallels, what happened during the pandemic can be very similar to what will happen with the effects of this war, where they're almost homogenous. We call them like traumatic market events, meaning a traumatic event that involves some large subset of the globe that we do not understand how it will affect the rest of the subset of the rest of the globe, I should say. And so the market's becoming insanely volatile in the short term until we figure things out and adjust to a new standard of living, right? So the pandemic, March of 2020, I mean, we were in Telluride like right before then, and I was shorting the NASDAQ like crazy, right?
Hold on real quick. So this just came in. Hold on. Let me view this. Contains.
Nick's got Google alerts set up.
Yeah. So is it how do you, what is that one? Kherson becomes Ukraine's first major city to be overtaken by Russian forces. That just happened, just literally right now, right? And so, I mean, that's a start where Russia had yet to take over a major city yet. But one of the things that I want to ask you, Brian, because normally what we see in what the government, if this weren't happening, what we were expecting this year is interest rates were going to slowly go up and we were going to start seeing where they're trying to control inflation, right? They're trying to get inflation under control.
Yep.
Now the thought process is, though, Canada did today increase their rate by 0.5%.
Their borrowing rate, really?
Yep, and they're still looking to push out several more increases the rest of the year. So it'll be interesting to see how the U.S. if they kind of mimic what Canada just did today.
Sure.
But the thought process previously was the Fed was going to increase rates. We were trying to increase mortgage rates.
Yep.
But in this volatile market, Mortgage Mike was actually telling us that with this insecurity, people start going more into bonds, which actually drives the 10-year treasury down, and then rates are going to go lower. And Jesse just pulled up an article just now on CNBC that says mortgage rates plunged just as home prices set another record.
Sure.
Right. So the expectations that we were really advising people.
Even last week.
Yes.
I mean, last week we were having conversations.
Well, that's what the article says, the biggest 2-day drop since March of 2020.
And because I would have answered this question prior to seeing that article or even knowing that information, that maybe the war in the Ukraine ultimately does two things for the U.S. housing market. It drives interest rates up and inflation stays going up, which we don't want, but it also might bring some stability to just buyers having to leave the market and some inventory actually started. You and I were talking about this before, right? Like, I put a house on the market the other day that it's only had 4 showings, right? And that seems insane now, but we're starting to see a little bit of that. I've always said you can still overprice in this market, but now that interest rates are going to stay low, there's no incentives for buyers to leave the market, right? If anything, I had a conversation with a buyer the other day who they're able to put $3,000 away per month. Right. And so that makes them more competitive in this market. While the prices continue to increase, they're going to pay more for this house in 6 months. Their position's not getting worse. And now if interest rates aren't a fear, right?
Well, yeah, 100%. And I think that might be the case. I don't know if that's even a good thing that interest rates stay low as far as the market is concerned.
No.
With the inventory crunch we have, it's probably not great that that interest rates stay so low. What you have essentially here is two competing forces. You have organic inflation, which is organic. Nothing's really organic. Inflation that is a symptom of just the U.S.'s habit of printing money for decades, right? Which is what we are already dealing with coming out of the economic recovery of the pandemic, which is, I think it just topped out. What do you say, 7.5%?
Yes.
Is that what they just said?
I think
so high. Then you have essentially what would be forced inflation. And what forced inflation means is essentially the effects of war, right? So the prices at the pump right now are not organic inflation. The prices at the pump are a symptom of global economics and the fact that we're coming down with pretty hard sanctions on Russia right now, which aren't even really in effect yet, but that is the market responding to sanctions that are being rolled out, which is essentially an artificial type of inflation. With those two forces, you're going to have to keep interest rates low just to be able to get people to get by, right? And keep their normal way of life, right? And so what I foresee, this thing's going to drag on for a while. Those people are not giving up, which is ridiculous. Like, just, it's insane. What I think from a more of a geographic standpoint, what I think nobody's really talking about right now, which I think is a very interesting kind of thesis to put forward, where I say traumatic market events, and them being homogenous, is that any traumatic market event, the market doesn't really know how to react because it doesn't know what the future looks like. So like the pandemic and the war in Ukraine are essentially one and the same as as far as how the markets react. It's just volatility. It's straight up pure unadulterated volatility in the short term until you figure out the landscape going forward. Like, how will the pandemic affect us? How will the war in Ukraine affect us? How do the next 6 months play out? Right now, it's just volatility all over the place. What I think will happen, and where I think there's a lot of parallels between the war in Ukraine and the pandemic, is that people's behaviors may change in very similar ways, and that affects the real estate market. What was one of the first things that happened whenever lockdowns in California and New York got super, super tight during the pandemic? People started leaving, right? You had emerging markets in America. You had places like Nashville that was already on an upward trajectory that just skyrocketed, right? The suburbs of places like Orlando, Florida, like Sanford and stuff, where Nick and I own assets, right? Those were insane emerging markets because people wanted to get out of the city, didn't want the restrictions, didn't want the closed list, wanted more space. Interest rates were artificially low because of the bank essentially having zero borrowing rates, and they were able to afford to move, and they wanted to go to a place that they were able to behave a little bit more normally than they were under the guise of a pandemic. The fact that a city that is the same size as Chicago is being, and not even the same size, the same cosmopolitan stature in Kyiv, Ukraine, is under attack by one of the world's global superpowers right now, is going to make people change their way of thinking about their day-to-day lives and where they live. One of the really interesting things that may come of the war in Ukraine as far as U.S. real estate markets is you may see a bigger shift from the coast inward to more suburban areas and out of urban areas, which is already where price trajectory is on the biggest rise. Price trajectory in North Texas is almost triple what it is in Manhattan right now. It's crazy. And so you might see a huge transfer of people and of wealth to more suburban areas inland as a result, very much similar to the pandemic, which is a crazy thing to think about as a symptom, but I think it's 100% true.
I saw this article that Jesse had pulled up, and it was funny because it wasn't so much that the article itself, like, I'm not surprised that people with lots of money have figured out ways to shield that money from people who want to take some of it, right? And I'm not even really hating on the game at all, right?
Why does the word oligarch hit me so weird? I hate that word.
I don't know.
It's only used when they're talking about Russia.
It is,
so
and it sounds so gummy and
they
weird.
even use it in here, and it says it's complete black box. The title of it is Russian oligarchs pour money into U.S. real estate market. It starts breaking it down. Like this article starts kind of from the 80s, but it starts talking about the New York real estate market and how much, like, there's like 53 people who own like $93.7 million, which is, I think it's way more than that, in real estate. And Brian and I were talking about the person who owns that penthouse at the top of Central Park 1.
Yeah, that Russian heiress.
Yeah.
What is it? One fucking Central Park.
Central Park.
Oh gosh,
Yeah.
so beautiful.
It's awesome. It's that huge building that sticks up from Central Park. And
You've seen it. If you're listening, you've seen it.
Yeah, as I was reading this article, I realized, I was like, man, that is crazy. Like, we were having that conversation, and there's some X amount of billions of dollars of real estate owned by Russian oligarchs.
That's 85 million of it right there
in New York City.
So there's another article. It's funny you just brought this one up, Kelderman, is that it talks about how they're, with the oligarchs, they're starting to see maybe there's going to be more money poured into here so they can try to shelter, because money laundering, it's, for international buyers, the U.S. real estate market, or just U.S. in general, is the easiest place to come launder money. But here's my concern as a real estate agent that I don't know if I would want to mess with at this very moment, is that on an NBC News article, it's talking about right now, it says there's not enough teeth into regulations in terms of making realtors report any international buyers at this moment, right? So
It's literally like in the state of Texas, it's a box that you check way deep in the contract.
Yeah, and it just came out last year.
Yeah. I don't know how long it's been on there.
Couple
But,
years.
yeah.
and there's not been enough emphasis on commercial real estate. So right now it's all about oligarchs buying real estate for themselves. While the European countries have long had similar requirements, the latest legislation is a departure from the U.S.'s longstanding approach to private companies and disclosure requirements. Still, the Treasury Department of Financial Crimes is working on a final regulation necessary to activate this type of disclosure network. So I don't know in the long run, if you start seeing, because we've heard some people talking about maybe there's some Russian money that they can come and have access to, blah, blah, blah. I don't know if I'm a homeowner, or if I'm an agent or listing agent, or just even a buyer's agent that may have access to that. I don't know if I really want to get tied up in that at the moment, because you have government start sticking their hand in places that, look, probably they don't need to be sticking their hand into. Then they start tying up transactions. I don't know. I don't know if I would want to mess with that in the long run.
Sure.
And so a lot of this stuff gets really hairy, especially with how quickly things are moving at this moment, and how, everyone from a government standard is trying to, be very, PC about this, but it takes one bad move, one threat of Putin thinking he's going to hit the nuke, and it starts tying up even more stuff.
I think that's a good point to make as far as the future volatility of this. Is one of the differences in parallels between the Ukrainian war and the pandemic, for example, is that we at least had an idea of the trajectory of the pandemic based on organic data, meaning daily case counts, restrictions, variants, where this was heading, right? And the economy, after its short-term volatility, could start to adjust accordingly based on future predictions. The future predictions of the Ukrainian war live inside of one psychopath's head. And so the short-term volatility might turn into long-term volatility. And I think as far as buying power and interest rates and things like that, though, what's an interesting concept to kind of think about is we need to raise interest rates in the United States. We've been at 0% borrowing rates from the Federal Reserve for too long, which is just a central bank. The Federal Reserve is a central bank. If you know anything about the history of central banks, the only reason we call it the Federal Reserve is because we had two central banks in the past. When they expired, we didn't renew them because our democratic society didn't like the idea of having a central bank. So we called it the Federal Reserve, said that it was going to house gold. Fort Knox does not have gold in it anymore. They're fake, and most of them are held by JP Morgan Chase and Goldman Sachs.
It's got chocolate.
Yes, it's mostly chocolate. Anyway, I said we need to raise interest rates to stave off inflation. What becomes difficult to raise interest rates around, though, is when you have organic inflation because you've been printing money forever. It's going to hurt to raise interest rates in the short term, but it's good in the long term. When you have artificial inflation, meaning part of the reason that gas is more expensive right now is because of our sanctions on Russia. And if we continue to do that, there's no good deed that goes unpunished. The more that we put sanctions on Russia, and the rest of the world does, the more it affects global trade, which actually hurts everybody. This is the balancing act that happens in war in a global economy, is you need to come down on the aggressor, and it's taking a little bit of poison yourself. You can't OD on it, right? And so you have to have sanctions on Russia. You have to enforce them, and understanding that it's going to hurt your own people a little bit as well. What's going to be interesting about the future is how do you predict and how do you futurecast? We're using that word a lot now. How do you futurecast interest rates and where they need to be, knowing that the artificial inflation that's affecting your people is determined by one man that has a habit of sitting at really long tables for no reason.
And the other person at the other end.
It's ridiculous. So what I'm trying to say is making correct decisions around interest rates and inflation that have a direct effect on the real estate market are solely based on the behavior of a man whose behavior is entirely unpredictable right now. And that's a really difficult thing to kind of.
So it talks about, like in this one article, I mean, we're just looking at articles after articles right now. Yeah. Jesse, can you go back to that one real quick?
That USA Today one?
Yeah, USA Today one. Because it talks about in here, like, look, everyone knows, it says inflation is too high. Everyone understands that. And it's going to take a while to get under control. But one of the conversations around this is if we can, even with rates maybe falling back down because everyone's investing in the bonds in the bond market and rates stay low. Now, while lenders and agents, probably the average frustrated agent out there, the AFAs, right? They're going to go back and like, oh, rates have fallen. The one thing to really start considering, and this may have an impact on the real estate market, is running your household is going to get even higher just running your house alone.
Yeah.
Right. So with crude reserves going up, the cost to heat your house goes up. Right. The cost to build houses will continue to go up. The cost to build with 2x4s will get more expensive. The cost for appliances are going to get more expensive.
You think about the ways. I mean, obviously, oil is just one commodity that is involved here, but think about the ways in which it is used in manufacturing and how it affects every other supply chain on earth. That's why the price of building houses and stuff will continue to rise, because the machinery that is used to produce the materials to build homes is usually gas powered or oil powered in some way, right? Like those things are all related.
So it talks about in this Realty Biz News article, high oil prices will continue to fuel inflation. Inflation slows consumer demand and could eventually lead to recession. Now, that's the first time that I've been in a while. I mean, if you remember up into 2020, all we heard was markets ending, recession coming. Then 2020 happens, and we haven't really talked recession all that much, other than we just talked about we can't keep printing money.
Yeah.
Right. And so I looked at I think it's through Statistia, a site that's just all stats.
I call it Statistia.
Statistia.
I think you're right.
Maybe potato.
I don't look at data.
potato. Right. And it talked about the odds of a recession happening. It's still less than 10%, even future casting out the rest of the year. And so, and that's still super low. Last year, I think it was July 2021. I think it was hovering around 20% as an odd of a recession starting to happen.
Really?
Yeah. And so I've always been a big believer in this, is that the media will start to drive the fear, right? The media can start predicting things, and then they start getting it going, kind of like whatever your take is on COVID. We know it's bad, but a lot of the hysteria also came because of how the media reports were, and that's now starting to come out because of that. And so if we start seeing more and more consumer demand is slowing down, which is going to lead to recession, if that keeps getting pounded into your head, what do you do as a consumer? Well, you're going to start hoarding cash.
Yeah.
You're definitely not going to go make major purchases because you're like, oh, it's so expensive. By the way, the media has been the one that's really been reporting on how home values have gone up so much that the affordability has gone down. Actually, if you go look, we're still actually lower in terms of affordability based on our income. It's still one of the lowest we've been in. It's
Really?
like 25%. I'll have to go find it.
I don't doubt
it. Keeping Current Matters.
Okay.
So I'll pull that up in here in a minute, but it's actually lower than pre-recession, pre-2007, where it was like 33% was the affordability index, meaning it was more expensive to buy a home before the recession because the houses were more expensive and your income was a lot lower. Yep. Now our income's higher, and even with the higher housing prices, it's still 25%. Your housing cost is still 25% of your income.
Yeah, 100%.
So it's not as high. Go to the blog. Go to Real Estate Blog.
Yeah.
I'm pointing to it like you can see it. To your right. There you go.
To your right. Right.
So we'll find it in here in a minute. I'll have to find it here, Jesse, because you got to scroll through it. But the affordability is actually there, and if we're talking about that, we are as real estate professionals and consultants, our job is to educate the consumer about this, and we're fighting the negative news, or we're fighting the media and just our thought process, because yes, as simple-minded human beings, when you just go see, all right, that house in the Colony, you know, or whatever, wherever you want to go buy. Like I look at the Colony where, my brother and I were buying investment houses for $40,000 to $60,000. And then when it got to 99, we're like, nope, way too much. Now those homes are $400,000, right? So if you live in the good old days past type mindset, you're like, man, that house is definitely not worth 400.
Yeah.
I remember when it was 50.
Yeah.
And so what do we naturally want to do? Well, everything's overinflated. Everything's priced too high. There's definitely, then we go to our PTSD mindset of 07, 08. We're like, it's definitely going to come crashing down. And if we go back to, was it 2 shows ago, or I think it was the last show that we did.
A couple weeks ago.
The last show, we talked about the Consumer Confidence Index,
Yep.
where the survey said, buyers said now's not a great time to buy.
Yep.
And I questioned, with that same survey back in 08, 9, and 10, would it told you it was a good time to buy or a bad time to buy?
Yeah,
What did you and I talk about yesterday, right? Like having a conversation with somebody around being like, I just don't really want to work with buyers right now. And I've heard this I don't really want to work with buyers right now because buyers aren't, it's too hard to get them under contract. It's not a great market. And it's like, dude, more not dollars wise, more units of homes sold last year than ever before.
Ever.
Right?
In the last 15 years.
In the last 15 years. Okay, sure.
I mean, for us, yes.
For our real estate experience, right?
We're only 16. So.
Yes, exactly. My point being is I've been through a lot of real estate markets and I've never thought any were bad. I think there are people who shouldn't buy at certain times,
Sure.
100%. But this market is not bad or working backwards or anything like that at all. It's super difficult and your representation matters a ton. Real estate agents have taken on some of this crap too, though. We don't talk about, you and I were just talking about some of the houses that actually have been sitting. There's not a ton of them. The market is as hot as people are saying, but we're constantly sitting out here just verbally freaking high-fiving each other all the time on social media about like 93 offers. And we all want to tell the one story of the one house that was absolutely bananasville and then make that the narrative for the entire market, right? Yeah. And as real estate agents, you have to make sure that you're share those things. Absolutely share those successes, but have a two-sided conversation. Talk about the difficult stuff if you're going to share that. I'm not saying it's going to affect national real estate news, but help the people who are in your 1 degree of Kevin Bacon to have the right information.
But I think if it could, if you get on board with that, it could affect it nationally by saying like, look, there were 93 offers, but how many of those were not so great offers?
Yeah.
Right. So how many of those were investor offers?
Sure.
Right. That were, read a stat that it was like last year here in the DFW, it was like 33 or 34% of offers were investor offers. So when you're talking about 93 offers, you cut a third of those out. That's not really, you're not really, who are you disappointing?
Well, and at the end of the day, let's all agree. We've seen those types of, we've physically seen the spreadsheets for those types of offers because they've happened on our teams, right? Like regardless of the percentage of them that are crappy, it's actually the top percentage that matters. You can only realistically go back and forth with about 3 of them. Now, I'm not saying 93 doesn't get you the most possible money. I'm not talking about how it affects all the other offers. I'm just saying like, from a real estate agent's perspective, that's actually kind of not great. I'm not saying you underprice the house, but you have an insane amount of work to do because if you don't have VAs like we do, right? Like, or whoever, right? There's so many types of things that go into that. Like we talk about that like it's a really great thing and we hang our hat on that. Like some people hang their hat on their job title or whatever. It's that we do the same thing as real estate agents. We hang our hat on that one deal and it's actually probably the exact opposite of what we want our real estate world to look like right now. I want my buyers to be able to get under contract.
Yeah.
I want my sellers to be able to move.
Yeah.
Right.
My biggest pet peeve at this moment is agents that are projecting their personal opinions and feelings on this where, again, we've had agents say like, this is a horrible market for buyers. I don't want to work buyers because it's not a great market for them. And if you have that mindset, that's projecting your personal
that doesn't
personal
mean
opinions.
anything. It's not a great market for buyers, like all of them.
That's the thing is,
what are you talking about?
So the conversation behind it is
just not a great time to buy a Ferrari, guys.
Yeah.
I tell that to somebody who can afford a Ferrari. I don't even understand what we're talking about.
As a fiduciary, my job is not to put my personal feelings and my personal opinions into, and way too many times we hear that. We see way too many get way too involved from their emotional standpoint, and they start to feel like that's their own house. And they're the ones making the payments, or they're the ones coming out of pocket that money, and it could cost their client a deal. Or they told somebody, especially during the pandemic and before, they told people to wait.
Imagine if you had told somebody 12 months ago, 12 months, like we were already in this hot market, right? Because I had one of these posts from January, the 73 offers post. So January of 2021, we were definitely in this insanity. Imagine telling somebody a year ago, just wait for this to calm down. It's people are overpaying. You literally advise somebody to leave somewhere between 15 and 20% of equity on the table.
20%.
Imagine in March of 2020 when the world was ending, if you told people to just wait until this thing figured itself out. It's 2 years of the most historic appreciation we've ever seen on. You would have made really bad advice. I think that's maybe one of the biggest takeaways from all this when we talk about the war and its effects and things like that. You've got to be able to, and I don't want Jesse to pull it up, but it's brought me to a thought where I saw somebody on Lab Coat or something the other day just saying like, how do you advise your buyers to even buy in this market? Like, do you feel any guilt around it or something? Like, what are those posts? Yes. It's like, why would you feel guilt? This is their decision to buy.
The only time you should feel guilty is if you know that buyer's committing mortgage fraud.
Yeah, like
and you should back up.
Yeah,
like that's where you just run because they shouldn't be because they're committing some type of fraud. They've admitted to you that they're lying on something. But like, if you were to tell me, and look, I'm the perfect example. I am my own worst enemy. We can have Heather on here to berate me, right? Because
that'll be fun.
Yeah, that would.
When can we have that show?
Yeah, let's see how that goes. Probably the most watched show ever. Jeez. But we've been looking. Look, we've outgrown our house. We've got way too many people in there. I like it just because I like the cheap payment. But, I have lived in the good old days or actually not even the good old days. I've lived in the fear of recession coming.
Sure.
Right. Because I've made a lot of investments, a lot of money because of recession. So I wanted to be prepared and I've read articles. Listened to all the smartest people out there. They're like, all right, get your, rain's coming. So get your umbrella, just bring it every day. Because eventually
you also got into this business during a recession.
Exactly.
He's like Bane. You adopted the darkness.
Yes. So I have talked myself out of 4 houses. The cheapest one was in the $600,000. That's worth $1 million today. Right?
Bro.
Then last year, if you remember, we were on this show. I talked about how there's a house that I made an offer on. And from that, I didn't like the way the negotiations were going. I let my ego get in the way and my pride and just stubbornness. And that house, more than likely, it did not sell, by the way. So I was right on one thing.
Yeah.
I can hang my hat on that. But if I were to go back and try to buy it today, then I know that I'm spending at least $150,000 more. So while I was right that it wasn't going to sell at that price, now I'm still losing. I won that battle, but I've lost the war on this one.
I'm glad you said that because what Brian was really saying in the lab coat agents thing, and just look, a little bit of, here's some care and candor for you real estate agents. If you're saying something to the effect of what Brian was just talking about, like how can you sleep at night advising your clients to buy in this? What you're really doing is wearing a giant hat with like scrolling red letters on it that says, I don't have the knowledge that I need to have to advise my clients properly in this market. Because what people who are able to advise their clients hear you saying is that you are scared you are going to make a mistake in the transaction that's going to cost your clients money.
Yeah.
Because if you're having the proper buyer consultation, the proper check-ins with them, keeping them their needs directly in front of them, understanding their financial situation from the standpoint of not allowing them to make emotional decisions, that is literally all your job is.
Yeah, exactly.
Right?
Can you imagine this happening in India, their industry? Like, think about the mindset of somebody who's asking, should you even be advising your clients to buy right now? Why wouldn't you just quit real estate then? Can you imagine somebody working at like a Twinkie factory and be like, how do we even advise people to eat this?
That's actually
it's terrible for you.
Twinkies are bad for you.
You'd be like, well, then why don't you just leave the Twinkie factory, you jerk?
Go
work at a carrot factory.
factory.
This is ridiculous.
I think
this is the craziest thing.
But you're going to be eating that if the nuke comes.
And here's the thing is,
I saw that on MythBusters. I don't think it's true.
I don't think it works. And that's not, look, and I understand the defensive reaction to that is, no, I just want to do right by my clients. And I want to make sure I don't put them in an uncomfortable, we're still talking about the same thing. I still want to do right by my clients. I still want them to make a great investment. I want them to tell all their friends about me. I want them to be able to buy another house again.
Hold on. You had a trigger word in there. I don't want to make my clients uncomfortable.
Yes.
Right. And so that's where we're projecting the uncomfortableness because we're having uncomfortable conversations while expanding our client's mind. I'll give it a great example of Nate right now, right? So Nate has a ton of pipeline business, piped out. Right now, what he has been openly struggling with is that his clients are fighting the urges to take Nate's advice on how to set themselves up in the best position to win on an offer, and they've lost out on 2 or 3. Nate's getting frustrated. The client's getting frustrated. That's a no-win situation for anybody.
Yep.
And I said, look, you're going to have to get tough. And you have to show your job as a fiduciary is to put your client in the best position to win, right? And so if you're not doing that, then you're actually not honoring the fiduciary because you're just letting your client kind of run the show on that, where your job is to advise them how they need to structure this without necessarily costing them, a ton more money or putting them in a bad spot, right? And you say, look, if you can afford it to do it this way, X, Y, and Z. So Nate has started doing that. And while he's definitely more exhausted mentally, because look, it's a chess game.
Sure. Yeah.
They're actually listening, right? And they're actually taking his advice. And so that just started happening a couple of days ago. So we have yet to see the immediate outcome or the immediate reward, which is going under contract. Yeah. But they are now taking his advice to put them in the best position to win, especially in the Collin County market where there is that high demand, right? There's 0.9 months of inventory in all of DFW.
It's actually up. There was only 0.6 the other day.
Yeah, right. I mean, I think that's just honestly one of the biggest takeaways from this conversation is if you think that you are the market's going to crash or this, whether it's the war or whatever, interest rates, inflation, whatever is going to, affect the market to a point where buyers can't even buy, sellers can't even sell, blah, 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 whatever. Like how quickly we forget. We've already been in just a couple of years through another very traumatic event like this, and we have figured it out. So unless you're God or the blue guy from Watchmen, you don't have anything to do other than advise your clients to do what is best for them. And what is best for them, and it sounds stupid, but what is what's best for them is always what's best for them, meaning the right time to buy a home. This is a question we get all the time. When's the right time? Is it a good time to sell? Is it a good time to buy? It's always the right time to buy when it's the right time to buy for you. And it's always a good time to sell when it's the right time to sell for you. And if you can get rid of your own personal ideology around events or whatever it is, you're going to be able to see a lot more clearly around the conversations you should be having with your clients. You don't need to be a genius on geopolitics to understand whether or not it's a great time to buy because of the war in Ukraine. You need to understand, does this family need to move because of what's going on in their life personally, right? Is it a good time? Rarely do people move, and this is where it does affect maybe the secondary market and vacation homes and stuff, but we'll just leave this primary. Very rarely do people move just because interest rates are low. Very rarely do people sell just because sales prices are high. They sell because they need to sell, and they move because they need to move. And if you can get rid of all the noise and the bullshit, you'd be a lot better off advising your clients.
This market's a perfect example of that. If people sold because prices were high, they would all be selling.
We would
right
have
now.
all the inventories.
If people bought because interest rates were low, everybody would be buying right now. You know what I mean? Like this, sitting here today, all the things that piss real estate agents off and they're struggling with most likely in their business right now are the exact reason why that's true.
How much money has Zillow and Opendoor lost?
Opendoor loses more money than Zillow in 2021.
Opendoor loses more money than Charles Barkley at the craps table. It's not even close.
Combined over $1 billion
last year.
So it says fast growing iBuyer doubles both net losses and revenue growth in eventful 2021. So let's see.
Ooh, that's interesting because they doubled revenue growth.
Well, yes, and that's here's all right. So I'm going to have I've got some different takes on this, right? Like there's too many times, and I saw someone post this. Maybe it was in Opendoor. Maybe it was Gary Keller posted on something, or heard Gary is like we should not be celebrating Zillow offers.
Can we talk just for one? I mean, interrupt you. Can we talk about how the subscription for HousingWire.com is $295 a year,
or $100 a quarter if you're cheap.
Ridiculous.
You're cheap, but it costs you more money.
I don't want to talk crap about anybody who's providing good information, but get it together, HousingWire. That subscription is ridiculous.
But if you want to sponsor the show, we'll be happy.
Yeah,
to give it
free
and
$300.
Sell this for $295 for the year.
Yeah, we need sponsors to keep the content free.
Yes, yeah, absolutely. So, and I can't remember again. Look, it may have been Gary that said this. Is like, do not be celebrating Zillow's offers, downfall.
I believe it may have been us saying that.
And Could have been. You heard it here first, and then maybe Gary talked about it, right? Or it was in somebody's Facebook group. But let's see. Opendoor. Here, I want to read it here. So, Opendoor surpasses by 261% of their 2020 loss. So they lost 261%. They lost 261% more money 2021 than in 2020. And Opendoor losses came after iBuyer OfferPad announced it made $6 million in net income. There was something that I'm a little concerned with, that OfferPad did come out on the positive side.
Yeah.
So eventually, we've been talking about this. Somebody's going to get it right.
This is one of the crazy things about being a publicly traded company with a lot of competitors in the space, between Zillow and Redfin's now doing it, OfferPad, all these iBuyer competitors. Is you look back at the mid to late 90s with the tech bubble, right? You had so many companies. Dude, if you look at things like go research all of Jim Clark's companies. So he had Silicon Graphics, Netscape, which created Netscape Navigator, and had a company called Healthion. None of them ever actually made money, but they're all widely successful publicly traded companies, because what makes money from an investment standpoint in the public realm is ideas more than execution a lot of time. And so where you'll see companies like Zillow and Opendoor and these iBuyer programs be able to lose a lot of money, you're 100% right. Since they're publicly traded, they can stay afloat through outside investment while still losing a $1 billion combined a year. Because when somebody figures out, or at least is in the right place at the right time and holding the right assets, gets it right, that's going to be the company that all of a sudden goes from the doldrums up to the stratosphere, and everybody wants to be on that rocket ship. So you might see, if you have 4 iBuyers, 3 of them might fail horrendously, and one of them might be able to figure out this execution strategy and actually make a ton of money. I don't know if there's ever, here's the thing that I think is relevant to real estate, though, and real estate agents. There's not enough space in the consumer market. There's no more purely consumer-driven market on earth than real estate, because it's where people live, right? There's not enough space in the consumer market right now for this many widely successful iBuyer programs. And so you're going to see the majority of them fail. Not even because they're poorly executed.
Well, is Opendoor the Zillow in that space then? In terms of Zillow's now Zillow's like the Google, right?
Yeah.
So is Opendoor the Zillow in that iBuyer space? Is, not many people would say Opendoor's name versus OfferPad.
Oh yeah, almost
right?
unanimously.
So, and it talks about it in here, where home purchases in 2021 with Opendoor are up. Opendoor bought 37,000 homes last year, which is 6 times more than they did in 2020. And in the fourth quarter alone, they purchased nearly 10,000 homes, which is nearly 5 times the number it bought a year ago that quarter.
Yeah.
And it has, amid those massive losses, they've had massive growth. The company tallied $8 billion in revenue, which mostly stems from a 5% sales fee charged to home sellers and proceeds from flipping houses.
Yes.
So that's good for a 211% year-over-year revenue gain.
There's like 2 things to really keep in mind. I wish I had a fucking whiteboard on this show. I just got to shut down on Facebook because I said the F word. Dang it! I'm trying to keep segs is what we're supposed to say now.
I don't think we're saying
and
segs.
what's the one for the F word?
I don't know. Maybe we just go with funk.
Funk.
They say
Okay.
frick. They say frick.
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 Where's
frick.
that a freaking whiteboard?
On Call of
Okay.
Duty, I say biscuit. Biscuit, son of a biscuit.
Is that why Kelderman keeps getting kicked out of Warzone in
Probably.
mid-game?
Yeah, I'm like, you got biscuit lover.
All right. I wish I had a whiteboard here. Okay. So the way to think about this is as far as growth and loss and all that type of stuff. So think about it this way. As far as real estate agents and what they need to be concerned about or not concerned about with iBuyer programs. Opendoor about 37,000 houses last year. What does it say? 6 times more than the number it did in 2020.
Yep.
So first thing to keep in mind, they are not in the asset holding business. They bought 37,000 houses with the intention of selling all 37,000 and making a profit in 2 different ways: service charges and actual margins on the flips that they're doing. They're essentially a flipping company, right? So when you talk about institutional buyers taking over the marketplace, this is a one-off purchase and sale. They're not taking the homes and holding on to them, meaning if the business plan doesn't work and the trend doesn't catch on, the iBuyer fad fades away and we go back to a normal market. So somebody has to eventually prove this model for it to actually really cut into the business of real estate agents long term. Right?
There's two things. It goes back to what I've mentioned. You and I have kind of tossed back and forth, agreed and disagreed on. First off, they have $5.7 billion in unsold real estate inventory right now.
Yeah.
Right.
I think they're unintentionally in the asset holding business.
Yes. So this is what my thought process is. One hypothetical path to profitability is ancillary services, particularly Opendoor mortgage loans and the title insurance. Now, I also said that, look, if you're holding $5.7 billion in mortgages and it's all privately funded, so you're not having to go through government regulation and stuff like that. So in the midst that my thought process is that, all right, let's say that by the way, fudge.
We can say fudge. We were
Matt.
looking for fudge.
Thank you. That if while interest rates continue to go up, maybe not this year now, but if we were pre-Ukrainian Russian war, my thought process was, all right, they can also start owner financing. If things got more difficult, now you're actually making a bigger, higher return on owner financing these properties out. Plus, you own the mortgage company, which is massive.
Yes.
And we're starting to see a lot more brokerages included. I mean, Keller Williams, Remax, EXP. Everyone is now with their ancillary services getting in a mortgage.
That's 100%.
Right.
Keep going.
Title insurance.
Yep.
So the CEO, I think his name is Eric Wu, did say that Opendoor has become one of the biggest title agencies in the countries, but he did not elaborate on that. The company did not break out its title and mortgage earnings, so we don't know what that is. Opendoor acquired a mortgage broker, Red Door, which can pre-approve loan applicants in 60 seconds or less.
What?
And
bet.
Another accurate as hell.
So accurate.
Another possible profitability path is Opendoor's partnership with home builders like Lennar, which is a long-term investor in the iBuyer program. So there are, in my opinion, again, this is why we can't be sleeping on this the iBuyer programs.
Okay, so I actually love this, and I shouldn't say sleeping. This may be where we don't see quite eye to eye, but I think we're on the same track. So to what I was about to say, kind of my second point is the reason that these operations can stay afloat is because when you're talking about their revenue growing while their losses grow, it's because their revenue comes from service charges and ancillary services and things like that, right? And so you can have revenue continuing to grow while you're actually losing a lot of money because you're not making money on the purchase and sale of assets. You're making money on the service charges. And then the other way, as a publicly traded company that you make outside money, is external investors. Like this guy. I own Opendoor and Zillow and EXP Holdings. And
what?
I know. I might have just made an SEC violation.
Actually, we have to probably now shut this show down.
I know. I think I just have to. I at least got to sign a bunch of disclosures. Right. So you can. Again, this kind of goes back to the technology companies in the 90s. You can make a lot of money as a large enterprise without actually being tangibly successful. But then going to the ancillary services side that's how I see all of this playing out. I never want to be the person that thumbs his nose in the face of innovation. So I don't want to say that institutional buyers like Opendoor can't figure this out eventually in a way that does affect real estate agents and their fiduciary relationships with their clients. And if they continue to lose money on their actual asset purchases and they only make money on service charges and turning it into ancillary services, then why would they continue the asset buying program and not just continue the ancillary services side of it? All they're doing, you understand that at the end of the day, the idea of having to buy 37,000 homes a year just to get the money off mortgage and title, why wouldn't I just start a fucking mortgage and title company?
Was it the disruption first off?
Yeah.
So to get in, so it's a lot harder to probably go and compete in a mortgage and or title industry when you're just coming because you're not the disruptive.
This might be a fucking beautiful Trojan horse way of getting into the ancillary services.
That's
industry.
what Zillow's been doing.
Exactly. And so eventually they'll probably shut down the asset purchase side. And so real estate agents, I don't think need to be crazy worried about the iBuyer side. From the ancillary services side, I do think there's an opportunity for people like Opendoor and OfferPad and Zillow to make lots of money. but their biggest loss leader is the asset purchase side.
That'd be like D.R. Horton stopping building houses just to keep their title and their lending
I
side up and running.
look, I think
No, because those are actually probably loss leaders for them. It's expensive to run title companies and mortgage services.
they're making money.
They don't. Think. Okay, so they are making money, and the only reason they make money is because they build houses.
Yes.
Okay.
You don't use D.R. Horton title for a purchase of a pre-existing home. You see what I'm saying?
Yeah.
Sure. But would you use Zillow's ancillary services if you weren't going through them directly?
If they do this long enough, have enough public funding, and become a big enough name, why do you go to Zillow's app to search on for homes?
So
because it's Zillow.
no, because if you can, it's
I have confidence in Zillow's third-party search algorithm. I don't have confidence in Zillow as a lender, though. Like, their name is already associated with something else that I trust. It's like, I'm not buying Mitsubishi anything because they fucking make everything. Same reason I won't go eat at what the hell's that damn restaurant over at the Galleria? Cheesecake Factory. You can't be that good.
Menu's 15 pages
You
long.
can't be good at all that stuff. So I have to assume you're bad at all of it.
I would say that they keep it going. Yes, they keep it going because that continues to filter the data. And the way that I see that with Keller Mortgage, right? I have friends who still use Keller Mortgage today.
Okay.
That I'm no longer with Keller Williams. Breaking news.
Whoa.
Wait, what?
Yeah.
I see it every time EXP hits something new and it goes out and recomments on the Christmas launch video.
Yes. That was a bump. By the way, you call it Christmas launch. That was a Christmas shot video that I launched in July.
I know.
Yeah.
That's why we call it Christmas
There's
in
a
July.
shot with Elizabeth. There's a Christmas tree behind her. It's like, what is
but what Keller Williams and I think where Gary Keller is the genius on this part is that Gary saw that data was the new oil, right?
Yeah.
He talked about that and taking everyone's data. You have 183,000 sales and 183,000 salesperson army that's going out and pushing out all of this information, and he's collecting that data. Now, someone like me leaves, and they still have the people that I pushed to Keller Mortgage. Now, the Keller Mortgage, what they've done really well is they've stayed in touch with them.
Yeah.
And they've done refines.
Yeah.
They've refinanced my clients.
Sure.
My clients have hit them up to go purchase other homes in other areas.
Yeah.
And so now, like Zillow Mortgage, while us as an agent probably does not like that name, the consumer doesn't care.
No.
Opendoor gets them in, they're loss leaders buying houses, but they go through it. And then now you keep the entire cycle. And if you do a great job at the marketing aspect, now the lifetime value of a client is where they start making their money.
Dude,
and and the momentum upwards.
Yep.
Right.
I could not agree more. I think we actually agree on this. I think maybe the one
we
place
agree to disagree.
We agree to. I think I think the one place where we maybe disagree is the mechanism by which they gather data and how long they'll be in place. I think their loss leader is the asset buying program right now, which is essentially a data collection method that will feed the ancillary services side in perpetuity forever. My question would be, how long does the asset buying side need to lose money to the tune of $682 million a year or whatever it was for Opendoor before they innovate in such a way they go, we have a better way now to gather data and just feed the ancillary services side? I don't know how long that takes. All I'm saying is that the everyday agent being afraid of Opendoor taking over the real estate industry, they're proving that they're just in this for the data side of it to feed ancillary services.
We need to have somebody on that's understanding.
Who's the CEO of Opendoor?
Eric Wu.
Oh, yeah.
Eric Wu.
Can we call Kim?
Maybe
somebody text us Eric's number.
Yeah,
go,
I mean, we've got to have people that can reach out to that. But at the same
how long
time,
are you going to do this, Eric?
I do want to have somebody that understands from a publicly traded company standpoint where they can lose money, because it talks about in here.
Yeah, they're playing with house money every day.
Well, and it talks about in here the where does it have it that the big financing, the main money source, right? So the crazy part is that Opendoor lost this amount of money, but their main investor is SoftBank Vision Fund, which also
generic.
No,
SoftBank. Are you about to do a little history on SoftBank?
Well, you can't admit it. Hold on.
No. I thought you were.
No, you can, because I was watching a documentary on the founder of SoftBank. By the way.
So you already know what I'm going to say.
Yes. So they also are big investors in Compass.
That's what
right. So Compass. So they talked about how it's kind of weird. SoftBank has constructed basically an empire of money-losing business models with very little signs of reversing course. But obviously, the SoftBank fund does not seem to mind about losing money right now. And the founder of that guy, I can't remember his name. Maybe hopefully you're looking up Brian.
SoftBank?
Yes.
Oh, I don't know. I don't remember.
I mean, the guy's put everything on the line at all times.
Yeah.
Like he basically has wanted to always be, however you say it, Masayoshi-san.
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 He's a billionaire.
Of course.
And
It feels racist just to say it's not, but like it sounds
24.3 billion.
24.3 bill?
yeah, so he doesn't care that he's losing this.
Lightweight.
Because he came to the United States. He went to college in California, and he was coming up with he was coming up like losing money or barely making money and coming up with investments. And he sold an investment to, I can't remember what company it was, but go research
investor
this guy.
in Yahoo and Alibaba.
Yeah.
Well, there you
Dude,
go.
the Alibaba one right there. Yeah, and Yahoo for sure.
But when you start playing with publicly traded money, and then you've got these hedge funds like SoftBank, like again, it talks about in this article that Opendoor has secured $10 billion in funding. So they've got $10 billion to go loan out or to go buy properties in.
I guess I'm just clueless on how much money there is available for stuff like this. It just sounds like even if you have money, how long are you going to take a kick in the sack to the tune of $1 billion a year?
Dude, we're thinking
I know. I just don't even
getting
understand
people
the
dollars.
numbers.
We're
yet. I
thinking
know.
as a mom and pop businesses
Sure,
that
I
we
get
run
it.
that has to remain profitable because we could only run for maybe 12 months at a very loss and still pay ourselves.
I get it.
I mean, dude, Jesse can pull this up right now, and this is exactly the point where I think we don't disagree, but I think we just have different ideologies around this. I think that they will have a tolerance for the loss leader being the asset buying program at some point. Regardless, we agree that being a publicly traded company gives you the ability to execute on ideas that don't need to provide returns at any point in the short term, right? If you go to the biggest companies that don't make a profit, I'll give you two right off the bat. Does anyone want to help? Uber is one. The other is one we've already talked about. Zillow. Never made money. Ever.
Didn't WeWork not make any money? And
WeWork has not only not made money, it almost collapsed under its own weight in the first 2 years.
But it's also he was buying private planes and everything else like
if
that.
you just do like
Who does that?
companies that like biggest companies that don't make money. Uber's the most famous. Grubhub's another. Doesn't make any money.
That's the thing is like we can't wrap our head around. Like again, you go back to the 2020 pandemic. We should have crumbled under that. Shutting down everything, you should have crumbled, right?
Oh, Airbnb is another.
Yeah, so you start looking at these.
Blue Apron.
Yeah, Blue Apron. So a lot of these are publicly traded funds, and so you start messing with that. It's a whole
Dropbox.
different game.
Yes.
Dropbox gets $200 a year off of me just for the.
Yeah, and they
Extra-
can't figure it
extra
out.
terabytes.
They're getting Matt's money and they can't figure it out.
Yeah, Casper, wasn't that the mattress?
I'm one of those people who like
Oh,
I can
yeah.
only delete blurry pictures. I won't delete any other pictures. Like I feel like it's like Back to the Future, and I'm just slowly erasing somebody from existence when I delete their picture.
So I would like to have someone on that understands that could break it down in our kindergarten mindset ways of why
Pinterest.
publicly traded companies can operate at a loss for so long.
If you scroll down further, I'll do you one better than Pinterest. It's Snapchat and Twitter. Both don't make money.
But that's only because that's because you don't see Gary Vee talking about
Now,
it
the
anymore.
owners of Snapchat, before they sold to Facebook, make a lot of money now. WeWork's on there too. Zillow. There you go.
Zillow.
Thank you.
Yeah.
It's like he reads a lot.
Yeah. So
That's going to be an interesting conversation in the
Yeah.
future. I don't know how long, and maybe this is yet to be seen. Do you think they can continue buying houses
Yes.
at this clip?
yes,
Man,
yes, because dude, all you got to do is secure funding,
Yeah.
which they are going to do,
I just,
and
you and I agree on everything else. I don't know how long they can continue the asset part. No, but I didn't mean to interrupt.
yeah,
but
I mean,
think that's the only-
has Zillow changed their? No, they just evolved, and they were losing money by selling leads to us. They haven't changed their strategy that much.
But as far as their history, they kind of just got into the asset buying thing in 2018.
yes,
They haven't been doing it since 2012, when
right,
they
but
first
but
started.
it theoretically on a business principle, they were not profitable.
They
They're still
weren't
not
profitable
profitable,
beforehand.
right?
No,
So
they
from
weren't.
that kind of mindset is Opendoor got into the iBuyer program. they have found a way to amass all this inventory. And then if you sit on something long enough, like they've got, what did I say, 5.6, 5.8 billion in unsold inventory at the moment.
You would have think if they were having such trouble making a profit, they would have just held on to all those houses for a little while.
I mean, one of the Zillow articles I read talked about how where they dumped everything, if they would have held on to it a little bit longer, they would be in a different story.
Way different
right?
Story. Slack.
Yeah. So
Wow.
With Opendoor, though, we go back to, again, it takes one little fundamental change into do they buy this and then they go into becoming their own lender, not just mortgage lending, but their owner financing.
Yeah.
Then you're starting to make more return off of it. Now you get into I was having dinner with some cool multifamily lenders last night, Terrydale Capital people, and the talk went around these, like, it's BlackRock and these other hedge funds that are buying up all these properties. And look, pretty soon, if you're sitting on $5.8 billion worth of inventory, you can easily turn that into a rental portfolio. And now your multiplier goes up.
Yes.
And we're going into, unfortunately, no one's wanting to step up and stop it. We've been talking about it, but we as consumers will eventually become a rental society. We're going to lose that battle because of the hedge funds buying everything, and because we want to make a quick buck. And I don't blame consumers, but you go get a great offer from a hedge fund, you're going to take it, but you don't want to go buy right now because you're waiting for the dip, and the dip's not going to come at a quick enough time, and you sit on all this cash.
Dude, this is actually a really great point with this amount of institutional buying, and this is actually, I'm always playing the part of the optimist. This will be the one pessimistic comment I make today. In the world where a company like Zillow or Opendoor, because they're publicly traded, can lose money for years and years and years and still remain afloat, we are quickly transitioning to a publicly traded real estate market in which hedge funds just want to get as many assets as possible and don't care if they lose in the short and even medium term, because they will always have an influx of investor capital. That's actually a pretty frightening thought as far as the availability of assets to the everyday consumer. I just thought of that right now.
We can start a hedge fund. Force it good, man.
Force it good, man.
I like it. And we're just going to take it public, and we're just going to go buy properties at a loss, and we're going to owner finance them out.
So, dude, if they can do this for this many years, why wouldn't a hedge fund just go and buy 500,000 houses, lose money for 15 years? But what's the upside? The upside is there's only so many people and only so many assets. Eventually, that trajectory has got to go up.
The upside is us as founders. We just sell, and we become billionaires.
100%.
I mean,
sell to BlackRock.
Yeah. But your risk tolerance can be infinite because you know that people need a place to live. That's
force it good, man. It's coming.
Force it good, man. Jesse, give us a question.
Oh, there's some good ones.
All right, here we go. What? I want to actually know this because Nick started to do this during the pandemic last 2 years, but he never came through on it. What would be your plan? This is not a Brian original. What would be your plan in case of a zombie apocalypse? Why are we so interested in zombies?
They're awesome.
They're not.
They're
God,
awesome.
those are scary.
I don't think we've ever really talked about this. What would you actually do if the pandemic was not the coronavirus, but it was zombies?
Maybe that's next.
What would you do?
I would get out of DFW.
Okay, but hold on.
I would get to a more rural
Let me
area
ask you,
immediately.
like, in all the movies, we start shooting zombies, right? But let's say
does anybody even try to talk to him?
Yes.
Yeah,
Or
exactly.
like you see this happening in real life right now. Like
problems.
in this hallway, this person comes and they look like a zombie. Do you immediately start shooting? No.
Yes.
We're not
100%.
No, you're not.
Yes.
We're not programmed that way.
I've seen these movies.
I think the reason we don't start shooting is because there's not a known zombie apocalypse happening.
When will you know?
Well, I imagine there'll be coverage.
The people in the movie always know in a crowded space when somebody just bites another human.
Yeah.
And then they start shooting, and I'm like, again, that's not happening in real life.
Okay, so
If
we've identified that it really is an apocalypse.
If they're Walking Dead zombies, I feel pretty good about my ability to survive in a private situation.
They don't look quite the same as the person
If they're
struggle busting down the hall.
If they're the I Am Legend zombies, we're done.
Oh,
Yeah.
Dunskies.
Those are vampire zombies, and they're very quick.
Yeah, but you just, again, all right, let's dissect I Am Legend a little bit. How did he have enough time to go get that house, and build all that protection.
I've
He
asked
did it
this
over-
question
he did it
too.
over time.
No, it's not about the time. The amount of resources that will organically expire
You mean
because
Will Smith
nobody's
didn't just-
manning them.
Just didn't have
Yeah.
giant steel doors that he carried.
And how did he
in.
train that dog not to run off in the very beginning? Like,
right?
Oh, you can train a dog to do anything.
no,
Oh,
bullshit.
sure.
Not when a
No, dude,
zombie's
you talk about
around.
master hunter dogs, so you can train a dog to sit
Just
right next to
the
you.
Do you understand if all of the power to Manhattan got shut down and no one was manning the power stations, the time it would take you to set up enough generators to run the stuff he was running an entire lab.
Yeah.
And you're not it would be
He went to Home Depot.
it would be
when
tough
everything
to
jumped
do
up.
that if there
That's
weren't
true.
vampire zombies hunting
And
you every day.
where did he get all that fuel?
Yes.
To keep running
He's
his
gotta go-
zombie apocalypse truck
From
like,
the cars. He just goes siphon it out of their tanks.
No, like
There's no internet. Where's he finding this stuff and doing the research? He's like a molecular biologist or something, and he knows everything about where to find the raw
no,
resources.
we're
to
dead.
power-
I'm
It
telling you, you're
seems-
dead.
Not
And
when
it-
they're slow.
No,
not
you're
when they're slow.
100% dead.
No, because
You're not dying the first day, but probably day 3 you're dead.
All right, here are the rules.
Because here's the other thing: the zombies are still organic material. They're still going to decompose and eventually just go away.
I think we have a good way to frame this
You guys-
conversation.
You guys have seen the zombie.
Here are the
right?
rules of Zombieland. Let's talk about how many of these would
This
actually
is
be effective.
So
How many
good.
people are still watching this?
I
Cardio
hope a lot.
would be a good one.
12,
We're
yeah.
still
More
on,
than
man.
at most part during the podcast.
Yeah.
We should like Nick was right. We should only do this. All right. So rule number 1 is cardio. Can't stress it enough.
Yeah,
Did
cardio
it
is
this
so
morning.
important.
The first ones to go are the fatties.
I will tell you right now, even the vampires from I Am Legend, I could probably outrun for 2 miles.
You obviously do not remember the scene where
I
they
would
come
get-
hauling ass across that field to his house.
No.
You ain't running away from
I-
that thing for a block.
I
bro.
will tell you right now, I'm 34, and so this does not hold up at all. But I did run a 4.6 in high school.
This is my pit bull story from
Dude,
last
I will
week.
tell
There's
you,
no way.
I was
I Am
in
Legend zombies get
school.
you so
I was
fast.
310 pounds and I could run a 4.8.
Hmm.
So I'm telling you right now, and I burned down a church shed one time, and the guy chased me, and I
What
beat
does that
that.
have to do with anything?
Well, I outran that
You gotta
dude.
get out of here.
I'm telling you, if there's zombies getting me,
He wasn't even being chased by a zombie
yeah,
vampire.
a zombie, I'm going to tell you, I can outrun them.
I dude.
You guys
I,
never have to prove yourself on this, so I can't.
We'll go get a
Argue my
zombie, and I'll
seat.
show you.
I don't need to prove that I could prove to you all the half marathons and
I
shit
believe
I've
that you
run.
can
But
run.
you're
I
not
could
shooting.
just-
By the way, you're also not shooting all those because your ammo is very valuable.
Yeah,
So you
Very
have to.
nice.
it's not like COD where you can just get a hit. You can
Yeah.
hit a rechargeable box.
Yes.
and
You don't
it-
respawn when you die.
Yeah. Okay, so double tap.
So number 2.
That actually.
So you got to double tap in the moments when you're not sure the undead are really dead. Don't get all stingy with your bullets. I don't agree with that.
I don't at
know.
all. That
Yeah.
would be the
Yeah.
part I would be very
but I would
liberal
say
about.
you probably need to get a sword.
Yeah, why don't you just get a different weapon?
A
If you've
sword
already
and-
downed it,
Yeah,
knife it.
yeah.
Or get a club.
Ooh,
Oh yeah,
yeah.
because if you were to like club his mouth
A
off,
mallet.
or
Like a
there,
mallet.
yeah.
He can still scratch you though, and then you'd be infected.
But they
Well,
never
it
show
depends
because
on- it
no, in
depends
all
on
the
which version
movies
of
they're grabbing
zombies.
your hands. It's only when you get bitten. So I've never seen
Yeah,
them
that's true.
become a zombie by scratches.
Oh.
That's true.
And their
because there's
nails
got to
stop
be
growing
blood
on you.
transfer.
And
Everybody knows zombie disease is only
it's in the
transferred through
saliva.
blood. Yeah.
if
It's the
zombies
saliva.
actually number
Yeah.
3 is really I like number 3 because if I became a zombie, this is where I'm going to go attack people. Is
Do you
you
think
got to?
that's smart?
I mean,
You think
The
they're
ones from
aware.
Iron Lemon and
Nick's just hanging out
Legend,
outside bathrooms, just to fucking take people out. He's a
I just wanna
zombie.
Think
I
about
just
this,
want to
though.
eat brains.
He's just listening.
think about this though. Like, why do zombies get stupid? Do you? I
The
mean,
whole idea behind a zombie. You guys are so uneducated.
Well, they're not stupid, Nick. They're ill.
The whole idea behind a zombie is you get this viral infection that kills you, and the only reason you come back to life is it brings back your
but there's
base
always
function.
how is there always a leader zombie?
That is true. They do alpha up.
there's
Yeah.
there's it's true.
I
Yeah,
think that's
I mean-
instinct.
It is. But
Walking
that
Dead,
means,
they didn't do that. I think Walking Dead is the most realistic example of what it'd be like to live with zombies.
It says
What
number
the hell
3
is a
though.
realistic example
Yeah.
of what it would be
I
like.
just said The Walking Dead. Go fucking watch
Yeah.
it.
Number 3 is beware of bathrooms. Right? So beware of bathrooms.
That's
you don't
fair.
want to get caught with your pants down.
That's fair. I like that one. I think is kind of a no-brainer in general. We should always be cautious in the bathroom.
Fast-
Like, I'm always
I
uncomfortable
don't
in
know.
public bathrooms.
Number 4 is seatbelts. So fasten your seatbelt. It's going to be a bumper ride.
Yeah,
I don't
sure.
know. I'm
Just
not.
I'm gonna tell you
fastening-
right now. If I'm living in a world where I'm constantly defending myself from diseased, ravenous other human beings, a seatbelt is the least of my
Well,
worries.
and-
I'm gonna
No,
be
no.
so
it's
punk rock
because
with that.
it's because you might have to swerve or run over some zombies. But here's the thing: is I think why this one's just stupid is, dude, you don't want to run over anything that weighs 150, 200. Like if you go and hit something that weighs 150 pounds 4 times in a row, your car's going to be pretty fucked.
I've
Well, no-
thought about this though.
You know what I
I've
mean?
thought about this.
Okay.
I'm learning to drive backward. 100%. learning to drive
There's still stuff back there that matters.
No,
What if you're
there's
real
not
wheel
as
drive
much
and you
engine
smush
stuff
your-
back
there's
there.
no
though.
engine stuff, the radiator, all that shit's protected.
That's a good idea.
But the
Just
problem is,
smash
what
them
happens
bitches
if
You
you,
smush the ass into your car and your tires, and now
how
you're
long
done.
do you all realistically think it would take you to learn to drive at full speed backwards?
like a year.
Like 2 weeks.
Dude,
You just figure out the mirrors?
Yeah, I think once you get the spatial orientation, you'd be all right.
A couple
with it.
weeks?
Maybe.
Sensitivity?
Maybe some muscle memory.
Because
stuff
the
for sure.
steering now is in the back. Which
If
it
I could
used to
turn
be in
on
the
and
front.
look, if I could turn on and look like this, it would go faster. If I had to do it through the rearview mirror, I think that'd take forever.
Matt was saying the other day he doesn't know when his back windshield is all fucked up because his thing is a camera.
Yeah.
And he doesn't know when it's
Yeah, I
full.
don't know. So I can't check my nose for bugs.
Somehow
or
it
anything
goes
for
from number 4 to number 7. So you miss
Oh,
5
maybe
and
they
6.
maybe they
That's
didn't
already-
talk about
those
Yeah.
that.
There's no
Sport
way we're
apart.
going
Yeah,
through
somehow.
all of these.
So
Okay.
number 7 is you got to travel light.
No, I'm traveling super heavy with ammo.
ammo. So
No, that's the only thing you're traveling with. But what about like maybe some underwear?
Yeah, I mean, I'll
And
take,
socks.
I suppose, underwear.
Well,
and
think
stuff.
Yeah,
about-
suppose in this scenario you guys are just master hunters.
No, I just assume that we're always going to have to hold down our position, so I don't care about how fast we're going.
That
I
is
just
true.
assume anywhere we're going to is also going
By
to
the
have
way,
zombies.
Number 8 is counterintuitive to number 2. It says number 8 is kill efficiently, but then number 2
Yeah.
says double tap.
Whoever
Don't be
wrote
stingy
these
with
rules-
don't be stingy with your bullets.
No, but
Jesse
then number 9
Eisenberg
is-
needs to get his
He does.
rules together.
Number 9 is a club doesn't have to be reloaded.
So we were
That-
right.
These are
Yeah.
all.
See?
These
Yep.
are stomping all over each other.
Number 10 is don't make any noise.
I might make more noise.
No, you would. Because are you trying to attract them?
Brian
just-
just goes into it doing like that. What's the dance the New Zealand guys do? The haka.
don't you guys? Because it's going to be very dystopic. Don't you guys? Haven't you guys ever been out in like the country or the wilderness? Just have the urge to just be loud and scream and get it out. I feel like I have that all the time.
Yeah, but if you're
'Cause
going to
I'd have
drive
so much
backward
angst.
into 'em,
I'd be like,
pull those
dude, I used to have a
bastards out.
life.
Number 18
And a
is
job.
Number 18 is you have to stay limber. So
Yeah,
limber
limber
up because you're going to be
It's
going
important.
downhill.
Can't support that.
Still
enough.
Going down
Yes,
that hill is
myself.
very important. So you need to just stay stretched.
I
out.
will
feel
tell you
like
right
that should
now,
be up there
and you
with number 1.
you've probably experienced this. You've probably experienced. You might have. I have played adult rec sports for a very long time.
Yep.
I will tell you right now, every time there's a sub and he comes in all hoss-like he's just going to light it up, doesn't
Yep.
stretch, immediately doesn't even pull a hammy,
Just gets
tears it
wrecked.
into 15
Yeah,
pieces.
yes.
Like, limber up.
It's
You're
always
just
in
not
it's
18
always an
anymore.
old man softball.
It's so true, dude.
Yes.
Limber up
Yeah.
is a good one.
You need to have Ziploc bags.
What else did we miss here?
I think we got.
We got-
hang on, wait.
There was
No, we
one
got
that
it.
I wanted to really dive for a second.
A question?
Go back. No, Zombieland ones.
Oh, yeah, yeah.
There was keep your okay, that's funny. Keep your hands to yourself. I don't know, man. I think I'd probably emotionally accept it and then get pretty gangster with it really fast.
If I could get out of the
I
highly
do like
populated areas, I think I could roll for a while.
I
Just
like
getting out of the highly
check back
populated
seat.
areas.
Yeah, check your back seat. That's a good one. But I agree. Like if you just go become a mountain man. Yeah, they're not going up there.
No, but then you end up starving to death or drinking
I was
some
gonna
water.
say,
that's
the
not
reality
good.
No,
is-
you've got to have
And
a
you die of
no. You get
freaking diarrhea and
no. You get a life
dehydration.
straw, or you have to go boil your water.
I just think
Now
I
you got to
wouldn't
make fire.
Well, you'd hit 2 rocks together.
I think it's going to be
way
like anything
easier
else.
than I thought.
If
Dude,
you have nothing but time, are
Yes.
you going to go learn how to hit rocks together and make a fire? Absolutely.
But that's the thing. I disagree because I don't think that you'll see it as having nothing but time. I feel like at the outset of the zombie apocalypse, you'll think that you have nothing but time. I think after about 2 weeks, you'll realize that no matter what your efforts are and how good you are at those efforts, the world is ending. Everything is over, and you'll throw caution to the wind and just go out as a gangster.
Matthew
you won't try to
mentioned-
learn any new skills. You won't learn to. You're like, dude, we're gonna die regardless.
Matthew mentioned
Starvation,
World War
probably.
Z zombies. I don't remember that one.
That's the
Oh,
Brad.
yeah,
Pitt
those
one.
ones are
Brad
really
Pitt, it's
fast.
a
Those
great
guys
movie.
were very aggressive.
They're the
So
ones in the
aggressive.
Israel scene where like they're all making the noise and they just like mountain up on each other.
Oh,
and
that
climb
goes over the wall.
and start coming over the walls.
Yeah. But I
Yeah.
would think like a good flamethrower. Like if you put gasoline over the edge and just a flamethrower, and then it all goes down. Like I would assume that.
I don't see, but you're right. You better get a book on what plants you can eat. I get it. I know you could probably stay
Get the
alive forever,
survivalist
and
handbook.
I don't know that I would want to do that. My life is perfect where I get to hang out with my buddies, watch TV, football, have some drinks, and kick it and have conversations. If you're telling me the rest of my life is me trying to figure out what plants to eat, I just might not even
But what
buy
if-
into that. I might just go full blaze of glory.
No, what if all 3 of us are
Like-
just hanging out in zombie?
Well, then you guys got to
Yeah.
learn to, kill efficiently.
Do you think
and
we
to
would
keep up with
do
me?
you- here's a real question:
And limber up.
Would we shoot one of another just because, like, man,
No.
Kelderman's holding us back? Like,
No,
I think Brian. I think we need to shoot him.
I can't, dude. You'd be the only guys to hang out with. The four of us, there's no way. I don't care how bad you're dragging us down.
That was a test you passed, Brian.
I would fight for our friendship the way I'd fight for humanity. Not because I love you guys, but also because I'd be so bored without it.
Well, here's the thing that all of the heroes are always they always encounter is your spouse, your best friend gets bit.
That's a
I shoot him.
That's a really okay.
God,
so
you
we're
have
gonna get in
to.
trouble here, but I do want to ask this honestly. If it came down to like us able-bodied gentlemen who are cool, and the people who are dragging us down were our spouses. Oh man. Feel free to answer one at a time.
I mean, I will put anybody out of their misery.
Yeah.
What about putting them out of your misery?
Yeah,
Here's the thing.
Or hold on, is it where we're like, hey, Brian, will you take care of my spouse? I'll take care of yours.
Whoa.
That's
Yeah.
it. Plausible deniability.
Yes.
Okay. That's a good. I didn't think of
The
that.
hardest thing would be the person that's been bit, they are dying, there is no recourse, and they're so scared of dying that they just like, no, don't do it. And then you're just like, it's going to be worse if they just zombie out,
Yeah.
right? But
That's true. That's like the
They don't
squirrel
listen
that
to
you just clip and you know it's going to die and you feel bad that you didn't run it all the way over. Where you're just like, I'm so sorry, dude.
I'm
sorry,
up.
bud.
You back up.
It's happened
On the
twice in my
freeway.
life. It's happened twice in my life where
Yeah.
I hit a bird one time and it popped up in the air and it hit the ground and it was still fluttering. I was like, I don't hold a Honda Accord. I was like, I just
I have some
Well-
questions I could ask that. I'm not going to do it on there.
Next
Like,
time for sure.
Yeah.
I
If they
think
got
if there's-
bit, like, what would you do? Yeah.
Oh. I think if there's one
Last ride.
message that's really pervasive in this episode, it's limber up and kill efficiently. It's true.
But don't be stingy. But it said don't be stingy with your bullets. So I
Yeah.
don't know.
A lot of conflicting ideas.
Yeah, I
there.
don't.
One bullet, one mallet.
I think we need to have whoever created these rules. We'll have them on the show.
Just
I
the
feel like it's a
Eisenberg.
lot like scripture. There's like 40 dudes writing this. I don't think y'all all agree.
Yeah,
on what you're
exactly.
saying.
Yeah.
somebody will come along in a couple hundred years and put it together for us.
Yeah,
don't worry.
I'm really surprised that with the pandemic we didn't see people doing that. A little
I
I'll
bet
be
we
real.
did. We
Limbering
just
up
didn't get
and-
to see it.
Was it on the
though.
news?
Remember, we've seen it before, but there was a pandemic. Do you guys remember the bath
Y2K?
salts guy in Florida?
Oh,
Yes.
That was a real zombie.
That was.
Yeah, that's probably the zombie apocalypse. Doesn't have anything to do with illness. It's just when bath salts get really popular.
If bath
But
salts
do you
ever
eat
get
bath
popular-
salts?
I
Is
think
that how they do it?
Smoke?
Is it
Do
don't
I
don't
eat
know,
them? No.
I
dude.
don't know.
Every time I pour the lavender bath salt in my bathtubs, I was like, "Is this what it is?
You're just eating Epsom salt.
Like, is
Or
this?"
is
I'm
he
just,
smoking it?
like, dude, I don't
the
know.
Dr. Teal's.
I've only used regular drugs. I don't know. Like,
There we go. Bath salts drug. Okay. Do you
Wait,
do
it's
you
a
eat
partnership.
them?
Wait, it's a partnership to end addiction.
Synthetic cathinones.
Oh, are there really a lot of people out there that are super addicted to bath salts? That's
Yes.
like, forgive me if that's like super insensitive. I thought that was more.
well,
of
no,
a,
I'm not being insensitive. That dude did eat that other guy's face off.
I did. I didn't think it was like.
I think the thing with bath salts and even like the synthetic marijuana and stuff is all they have to do to get around these is like change one piece of the chemical code, and
It's
now
the same
it's a
with
totally
like
different chemical.
pro hormones, which are legal steroids.
Yeah.
It's the same.
I'm sure
thing.
same thing with a bunch of pharmaceutical stuff too. Like,
Dude, that's actually way worse. Is like K2 and what's it? Not sativa.
Sativa?
Is it stevia?
No,
It's
that's
not
a
sativa,
sugar.
that's
It
right.
has the sweetener.
But salvia.
Stevia.
Salvia.
Salvia.
Yeah.
It's like way worse than weed, and it's been legal forever.
What's that stuff that you make green? It's like a tea crop or like you see it now at all the vape shops and
the
they have it.
kratom.
Kratom.
Right, yeah, I've seen
Yeah.
that too. I
Like,
don't know what that is.
I don't either. But
Folks, just stick to the regular old grass.
Yeah, just if it's
Stop messing with all this
You
stuff.
could, you could always go Joe Rogan. Just a little
DMT. He doesn't do that so much
No,
anymore,
he
does he?
doesn't.
Everybody,
what is that?
It's dude. It's
Oh,
like
super-
microdosing. Basically, it's like a different form of Molly, right? But you microdose it.
It's a
I don't
super
know, man.
psychoactive.
Yeah, it's
blunt.
I've never
Psychoactive.
done any of that. I'm
My party line on this was a line from the movie Knocked Up, where he's talking to his dad, Harold Remus, the great Harold Remus, and he says, talking about how he used to talk to him about marijuana and stuff in the days, and he was like, powders and pills, no way. If it grows in the ground, it's probably fine. But just make sure you get it from the ground,
Yeah.
not from a
Yeah,
vape shop.
Harvey did say you smoked them.
Yeah,
by
you
the way,
smoke them.
You get-
that's right below the
You
comment.
would know.
That
Now-
makes sense.
Now you've
Come
got
on.
running, burning zombies.
Oh.
If we were to light them on fire,
I know Harold Remus did die.
R.I.P.
R.I.P.
All right, boys.
All right,
On that note, stay hard.
double tap.
Get us out. Do something. Make it go. Thanks for watching the show today. Make sure if you're watching this on Facebook, you head over to our group, the only real estate group worth being a part of, so you can watch the extended conversation. If you're watching this on YouTube, make sure to like, subscribe, and hit that notification bell. And if you listen on the Apple Podcast, leave us a review. We'd really like it. So just do it. Do it. Do that over there. Go to this one. Then go to that one. Thanks.